Hi everyone, and welcome to the video solution to exercise 1317, which involves looking at contingent loss liabilities. Um, and so in this problem we have sound audio manufacturers, sound audio manufactures and sells audio equipment for automobiles. Engineers notified management in December 2024 of a flaw in the circuit of an amplifier that poses a potential fire hazard. So an intense investigation indicated that a product recall is virtually certain, estimated to cost $2 million. The fiscal year ends on December 31st. And so what we're being asked to figure out here is, well, we think that we're going to have to pay $2 million, but that's an estimate, and we think it's pretty likely that we're going to have to pay that estimated amount. So the question is, we've got two things going on. We have uncertainties. We have uncertainties, and the first is, will there be a recall? And two, if so, how much will it cost? All right. And a liability, the definition of a liability is something that we owe as a company, right? Here, we're saying that we have a high likelihood of owing an estimated $2 million. All right, which as accountants, that puts us in a tough position because, well, we have these uncertainties. Will there be a recall? Right? It's not certain. We're not 100% sure that we will have to do a recall. So that's the first thing. So if we're not 100% sure that there will be a recall, do we have to record a liability? Do we need to say that we owe something if there's a possibility that there won't be a recall at all? So that's the first question. And then the second question is, well, even if we think there's a high chance of us having a recall, figuring out how much we owe, that's an estimate. So how do we record a liability in our balance sheet if the only number that we know is an estimate? All right, so those are the difficulties here. We need to record a liability. That's, but the difficulty is, at what point do we say it's certain enough that we should do something about it? And then if we get to that point where we say, all right, we need to do something in the financial statements for it, how do we figure out what to put in the financial statements, what amount? And so fortunately, GAAP has this decision matrix here, which helps us with this decision. And in this particular problem, we have a probable recall. So there's a high probability that we'll have a recall, and the amount that we will have to pay can be reasonably estimated. So we're in column 1, the probable column, and in row 2, and in this decision matrix, it's telling us we should record a liability and also include a disclosure note to our financial statements. So number 1 here is that, yeah, we should record a liability. And so we should record a liability and we should write a disclosure note. Record and disclose. All right. 2, what loss, if any, should Sound report in its income statement? Well, if we're going to record the liability, we also have to record the related loss. And 3, what liability? Again, $2 million. That's the amount that we're going to record. And finally, the journal entry to do this is going to be a debit to a loss account, recall, and a credit to a liability account for the recall as well. And it will also be for $2 million. All right, and so in practice, these are difficult issues to handle in accounting, because it's not the journal entry itself that's challenging. The challenging part here is making this assessment of the likelihood and then the estimate of the amount. That's the hard part. That is the part that requires a lot of effort and a lot of evidence gathering to support the number. But in terms of journal entries and recording this is a pretty straightforward issue to deal with. So that concludes the solution for 1317. Thanks very much for watching. Hope you found this video helpful. Take care.